Okay, welcome everyone. Let's start the morning off with some stock market charts, figure out if we can make some money. If you're new, I cover stock market technical analysis. Everything in here is really just my opinion. It's just my read on the charts. I try to predict and tell people where I think the markets are going. Obviously, I have no idea where the markets are going, and nobody else really does. But the charts give us clues as to where the markets might go. And so everything on this channel is about finding the probability and where the charts are telling us the probability of something going is, and then we manage the trade. We manage our position sizing. We take profit when we hit certain support levels so that you're locking in your gains. Everything's traded around the charts and the levels. So as long as you're managing your position, you can do quite well. All right, let's get into it. Leave me a thumbs up. We're going to start off with the triple Qs. We're getting a bounce today in the Qs. Let's go to the hourly chart. So what's really going on today? It seems pretty bullish because we gapped up. Every time you get a gap, it seems very bullish or, bearish depending on the gap. But what did they really do so far? They gapped it up and ramped it right up to resistance at 311. See my level? I've had that level marked for a while. We didn't previously hit that level in the past, and today we actually hit it. So far we're being rejected at that level right there with this hourly candle. So watch that level at 311. It's about 311. Yeah, we'll just call it 311 flat. You can see that was support here. Then we broke, and once we broke, it was resistance, broke down right to 297. And now we're basically just ping-ponging between 311 and 297 on the SPY. So watch those two levels. A break of 311, a nice solid break, not just a little tick above it, but you want to see that nice solid break above it. That would be bullish. However, we also have this downward trend line right here, this downward resistance up at about 316, 317. You can see this is where the downtrend started. We've had one reaction, two reactions, counting the top. So we have three reactions. So we have that as resistance as well. So I wouldn't really want to be long this market. I will continue to look to sell the rip until you get some sort of a bullish breakout of this downward trend. All right. So until I see that, I'm not really interested. I think there's some more downside in general. That's what I'm looking at. And again, when the market wants to correct and go down, it doesn't make it easy. It doesn't just start collapsing and say, hey, everybody jump on board. I'm going to sell off. No, what it does is it'll sell off kind of randomly out of nowhere, catch people off guard. And then just when everyone wants to get short, it bounces against them. All right. So that's why in this market, in downtrends, you want to sell the rip. What I mean by sell the rip is when you get a big move up into resistance, that's where you get positioned short. All right. You don't wait till it collapses, and then at the end of the day, after everything looks bearish and everything looks horrible, you start shorting. You want to wait till it rips into resistance and you sell the rip. Okay, so I still see these two levels as the key levels we're watching, 311, 297. A break obviously below 297 sets us up for a move all the way down to about 282, 283, right in this area. Let me just kind of mark that out right down in here. And I think that's probably the level where we're going to get a near-term bottom, probably start, have a relatively decent rally down around there. And from the high on Qs, that would be a total drop of about, we'll say 16%. All right, so that, I think we get a bounce off that, and there's possibly more downside, but for now, I really just think down here. Again, I don't know. This could be the end of the drop, but I don't think so. One of the reasons why I don't think so is we've seen really no selling in the SPY. So here's the SPY, and the SPY is breaking above this resistance level of 387.29. We got to close above it. It looks like we're continuing higher. Something to kind of, something to watch for. The SPYs, there's just been no real weakness in the SPY. It's really just been this rotation out of tech and into financials and energy, basically, and probably industrials. So it's been this rotation out of that, but there's been no broad-based selling. So what I would look for, I think if we're going to have an actual correction, we need to see some more selling in the SPY, which tells me that there's going to be more downside in the Qs and in the SPY and really across the board. So we'll watch this. Right now on the SPY, I don't see bullish divergence, so I suspect we fail right around this level. You can see we're really making a downtrend right about here, where we have a high, lower high, lower high. So we should fail right in this area. So watch for that. If we fail and dip back below this 287.30 area, then I think we're likely going to continue lower. That's really all I see in SPY right now. I don't see bullish divergence. I don't see anything that's telling me on this hourly chart that the bottom's in. And we really didn't make a bottom. So as far as I can tell, this is just a pop, and then we're going to continue lower in SPY. So I'm watching for that. Looking at the hourly chart, you can see, we're right in the area where I think we're going to get rejected. We could go a little bit higher up to maybe tag this 389.50. But I think we're going to get rejected right in here. At least that's what the chart's telling me. I don't see any reason why the SPY is going to just continue higher. I think the SPY is going to, move lower from here. Small caps. So small caps, you have this resistance line right, or this trend line right here. And we tag support here, kind of undercut it. It's not the best trend line, but you can see we had this sell off, and now what are they doing today? Well, they're just kind of barely popping it above this this trend line. So we'll see, but I suspect it'll probably just kind of grind above a little bit, not impulsive, just kind of barely grind and then roll over. Maybe not today, we might continue to just kind of grind along this trend line right here the rest of today. But I suspect it's going to roll over, by Friday. I suspect we are lower than where we are today. And we also have this downtrend line right here. On the hourly, you can see down, down, down. So nothing's really happened technically. We haven't broken the downtrend. We are basically back testing resistance. And we are likely, this is likely where this thing will start to roll back over. IWM, I still think, is heading down to this area around 195, 194, 193, somewhere right in there. Basically, I've got it circled in this area right here. So, risk reward, that's a potential 14% drop, roughly in the IWM. So I think there's some potential really good risk reward for IWM, because what I would probably do is if you can get a strong hourly close above this downtrend line, you would just stop out, right? So I would say maybe up around, you could probably go as far, you got to give it a little bit of room, but you could probably go as far as like 227.50 or something like that. So from where we are now, that would be a move of about 1.5% risk. And if you're right and it's going to sell off, down to here, that's about a 13% gain. So you have a very, very favorable risk-reward ratio, all right? And so every trade should have a favorable risk-reward ratio where you have the potential to make more money than you have the potential to lose. Okay, so, here's TLT, and this is interest rates. We want to talk interest rates real quick. So TLT caught a little bit of a bid today, but nothing technically has changed. And so that's why I think Qs is going lower. Qs has been selling off based on the fact that interest rates on the 10-year treasury have been rising. And so when TLT goes down, interest rates move up, all right? TLT is the bond, the price of the bond. Interest rates are the value, the yield that bond pays. The less the bond costs, the more the yield, right? Because they pay a dividend or a coupon, basically. That's a fixed coupon. And so if you have to pay less for that bond, that fixed coupon is a higher percentage of the total value of that bond. So yields move inversely from interest rates. And look what we got going on. There's nothing technically changed in this picture here. We have, we ran up, tagged this resistance of like 140 area, and we're just kind of hanging out, selling off. So a little bit of, little buying in TLT, but nothing technically has changed. So until I see a technical picture, something that's actually different here, then I suspect that this is just This is just a move meant to shake people off their tech shorts. All right. And that's all I see on this one. So we're going to watch this, this blue line right here, a recovery of that. We start to set up for something different than maybe we are, maybe the interest rates are going to drop. One thing you could, if TLT sells off more and it does it relatively soon, we'll probably start to put in some bullish divergence on TLT, which could signal, that a near-term bottom in this is near. But, what I think is going to likely happen is we're going to see interest rates sell off a little bit, kind of impulsive down below the low here, make a new low, put in that bullish divergence. Tech will freak out and sell off, impulsively down to that next target that I have. And then that's likely going to be kind of the near-term bottom in this move for now. Now, am I calling for, when I say we're going to have a near-term bottom, that doesn't mean that we're just going to resume the bull market, all right? What that means is near-term bottom on the sell-off means maybe we have a rally that can last days to weeks, maybe a month or so. But it doesn't mean we're going to make all-time new highs in tech and the S&P 500. It just means that we're going to have a little bit of a rally. But again, I also think SPY is going to sell off from where it's at from right here. So the rally that I'm potentially calling for in the future, there will be a rally in the future, doesn't necessarily mean I'm saying that we're going to bottom and then back off to the races. All right. I don't think that. All right. I think that we're likely, if I go to the SPY, I think we're likely going to sell off in the SPY, potentially coming down to 361 or maybe all the way down to this 350. And then we'll get a rally, all right? But that rally is going to fizzle out. It's not going to make all-time new highs. It's going to, maybe a bounce up to 380 or something. I don't know where it's going to go, but then we continue to roll over in the longer term. So I'm just trying to call, what I think is going to happen in the short, intermediate, and longer term. Again, just going off of what I see right now. So I'm just anticipating what might happen. As of right now, markets are rallying, so we got to see things kind of get rejected at the resistance levels that I talked about. Okay, look at gold. All right, I've got this green area circled on gold as kind of my area where I think that we are likely going to bottom out in gold. Gold sold off pretty good from the highs. All right, so back here, I exited my gold way back here, my miners, and from the high we've dropped a total of 20%. So that's a pretty good, that's almost a bear market. It's not quite a bear market, but almost, going by the definition of 20% down in gold. And we are, catching a pretty good bid today, up $32. And this also looks like a bullish engulfing candle. I mean, that's what it is right now. We'll see if that actually closes the day with a bullish engulfing. So something to look for. That looks pretty bullish, and we were down near the trend line right here, this lower trend line. Again, I like this area for buying gold and gold miners. I've been buying the miners over the last month, just adding to positions as we've continued to kind of trickle lower, and it's looking good. Let's look at the dollar. Dollar's back below 92, so look at that. A little pop over that 92, making everything look pretty dollar bullish, but now failed and back below resistance at 92. 92 is a big level for the dollar, so I didn't expect it was just going to explode, higher. We're going to have to battle with that. So I'm not so sure. Maybe the dollar drifts lower from here. It is at a key level of resistance, which I think it's likely to get rejected here. But if it does rally, then, we'll watch for higher levels. Probably, let me go to the daily. If it rallies, if we can break 92, then I think it's heading all the way up to 97. That's what I got on the dollar. Gold, I like gold in this area, so I would probably have to say the dollar gets rejected right around this 92 area. Quick look at financials. All right, so I had this little circled as a potential reversal candle, but there was no confirmation, no reason to enter a trade. I'm not sure. To let everybody know, I haven't stepped in shorting financials. And that's one reason why I guess I don't prefer to short the IWM. is because it's loaded full of regional banks, and financials just don't have a sell signal in general. So yeah, that's something to watch. I think, if the markets are going to make another leg lower, these financials should sell off. All right. So I think there will be an opportunity to short these things, but I just don't see it right now. So as of right now, financials are trending up. And yeah, that's it. Let's look at the FANG stocks. Apple broke support yesterday. Today they gapped it up and it's back in this range. So basically we've just got this range. Oh, I don't want to move my trend line. We've got this range right in here to kind of work with. And, basically you've got support right here at 118.50, resistance at 125.50. So, till you break one of those, we're probably just going to ping pong around. Microsoft has not broken down yet. It's still hanging, it's still holding onto its support, which is 227.90. So until that goes, Microsoft's bullish, all right? It's just as simple as that. Now, if you see it go 227, you see this blue line, you see a impulsive break and daily close below that, look out below, tech's going a lot lower. But until you see that, we're hanging in there. Amazon, what has Amazon done? Amazon has done nothing right here for the last, forever basically. But really this is all the way back to July of 2020. So coming on, 9-10 months or something of really just going sideways. So Amazon, you've got 2930 as your level to watch, a daily close below. That signals probably a longer term top in Amazon. Or this is a big consolidation period. We're flagging out and we're going to break to make a new high. 3283, kind of a break above this, start getting in this area, and that to me would signal that Amazon's actually going to make is going to run for another leg higher. As of right now, I don't know, And Google, again, doing nothing. It just continues to kind of trade in this area. So I don't have anything to update on that. Okay, let's look at some of these high-flying kind of mania tech stocks that have been, they're the ones I've been talking about for a while. But let's look at really what's going on. TAN up 12.5%. I covered my TAN short yesterday. I'm still short a lot of different things. I just covered the TAN short because we started to fall into this support line. We didn't quite get there, but we ended the day right there at 78. Well, we ended the day at about 80, and it was close enough. If you look at my hourly chart here on TAN, my level is not the clearest level. That's why I closed it. I can't quite make a level that's super clean. So I've kind of got this range anywhere up from about 79.40 down to, really down to about $78. Because you see, let me show you. As I zoom in, resistance fell short there. Then we hit it there. Here, right here, we hit it. We popped above it, but still closed right below it. And then here we were at it. However, when we broke above it, you can see we came down and stopped short on support, and also again right there. So it's not the clearest level. It's kind of the zone, and because we were close in that zone yesterday on my TAN, if you go to the daily chart, you'll see that we were pretty close. I decided to close out that short and look to re-add that short on a bounce back to resistance. So that's what we're getting today. It's bouncing back. And, I would look for a bounce back to this 97.75 as the potential to reshort this thing. Now, they could pop it just briefly above, but I think it'll probably end right around that level. All right, so that's what I see there. Let's look at some of these other ones. Pins, most of these, they're just rallying today, but there's no technical change in posture. Let's look at, here's Redfin. We hit support. I had it marked out. We hit it 2 days. We hit it there, and today we're bouncing. So again, we could bounce all the way back up to this 74.83. I'm no longer short this thing. I closed this out. Back here when we hit our support. I closed it out at support, and now we could potentially bounce up to some resistance up around the $75 range. PayPal, I'm still short this thing. And because, yes, yesterday it did close at support, and I pointed that out in my video, but I chose to not close it because I think the breakdown's just getting started on this one. So here's your March 2020 lows on the daily chart. And we have this bearish rising wedge. We just started to break down out of this wedge. So yes, I think it can backtest. I think that's possible. We could backtest a little while. But again, I still see this as a broken trend, and I think the trend is going to be to the downside now. So I don't know when that trend will resume. Today we're getting a kickback, but technically nothing's changed. We haven't recovered the broken support. We haven't, we're doing nothing. Basically, we're just kind of bouncing within this area. So still short this one. Chewy, you can see even today, Chewy's up, but still below this daily support trend line. So here's your trend line right here. And you can see we broke down there. There's your sell signal. A little bit of a rally today, but nothing's technically changed in the technical posture of this thing. So ultimately, I'm not short this, but if someone was short, the chart tells me that this little bounce there's going to be more selling. Whether we do a full back test, which I think is possible, we could run up and hit the trend line. But again, you don't know, all right? When you break trend line support, you don't know if it's going to backtest. It could, but you don't know. And so, you take the sell signal, you could add on backtesting, but if it, if it just rolls over, you don't want to miss that opportunity. Etsy, all right, so Etsy's just trading within this range. You've got resistance right here at 214.06, and you've got support at 197.30. We broke it yesterday, but today they popped it back up and recovered it. So I think it's likely we're going to head up to the top of the range. But again, you can see, what are we really doing? We broke the trend line support right here. Here's your breakdown, and once we got down into this range, we broke here, hit support, bounced up for a full back test, sold off, hit support, undercut it a little, but bouncing. So we're just bouncing around, basically between this range. So I don't see anything technically change. Markets will do that. They'll just kind of gyrate sideways before they drop, and they can do that for a while. So I'll just stay short on this until I see a technical change. Peloton, I'm not short this one anymore. I took profit down here at the 200-day moving average. We are bouncing back up to resistance, which is right there at about 118.46. Do we stop there? Do we run up and hit 125.50? I think that, that's possible. We could run up and hit that. But again, it was a good time to take profit down at this 200-day moving average. So for me, I've kind of moved on from this one. It was a very good trade. All the way from up here at the entry down there, it was about a 37% trade. That's a pretty good gain on a trade in a pretty short time. So, I think there's possibility to go lower. But we got to see the general markets roll over as well. Nvidia. Okay, so this one collapsed yesterday, but today they gapped it higher, and it's running higher, and it's starting to hold this 200-day. So we'll watch this. This could be a bear trap. This big drop yesterday looks like that to me because it's holding the 200-day moving average as of right now. However, let's look at the hourly. Yeah, you did have some bullish divergence. There it is, right there. It showed up yesterday. So this was a divergent low. So yeah, you're getting a bounce on it. I'm not short this one. I don't have a position in this. But again, these are things to watch for. Usually when you start on corrections, when you start getting hourly divergence, that's usually the signal that you're going to get a bear market rally or something like that. That's hourly divergence. We're above the 200-day. So yeah, this is where the buyers are bidding it up. Where's it go? Well, it could do a full rally all the way back up to this 550 area. All right, so it's something to watch if you were short this thing. This is a short covering rally for sure. And I would probably be covering as well just because I don't know how high this thing can go. I don't want to short. I want to short as we fall into support, or I want to cover shorts as you fall into support. And, when you start rallying, you want to look to reshort up at resistance. Right now, resistance I see is probably all the way up there. So no trade for me on that one. DraftKings, look where we bounced to, right up to 65.02. So again, this still is a bull trap up here. This move up here we're rallying, but it failed and broke down, ran right down to support, which is about 55.50, bounced off support right to resistance up to the 64, 65 area, and we're just rejecting and we're below that. So again, we can gyrate around in this zone, but I still see that level holding. As long as that level holds, I'm trading off of this bull trap or this false breakout here. So I think we're likely going to trade all the way down here to 45. That's what I see in the charts. We have a negative divergence in DraftKings there, and yeah, I think this is going lower. Just bouncing today. Carvana, look, broken trend. So here's your bearish rising wedge right here. We broke. We got a sell signal yesterday, bouncing today, but nothing's technically changed. So again, this is how this works. Things aren't going to go straight down. I keep telling I tell everyone that when you start to get sell-offs, they don't go straight down. They bounce. It's the slope of hope, and that hope is bounces along the drop. So as you continue to drop, you're going to get these bounces that keep people in trades. It gives people hope that have been long, that have been trapped. The bounces keep them in the trades, so that keep them in the positions, so that they don't exit because they feel like, okay, maybe this is the bottom. Maybe I'm going to get my money back now. I'm starting to get some of my money back. Okay, it's looking good. That's the mentality behind it. And so you need these rallies along as things start to fall, you need these rallies because that creates the next wave of sellers. You get dip buyers that step in and buy the dip, and then as things start to roll over again, those dip buyers who just bought the dip start to sell, and that creates the next leg down. But again, nothing technically changed our Carvana. We have big negative divergence here on the daily. And we have a broken bearish rising wedge or channel. It's not quite a wedge, but it was wedging. It just had a ways to go. So, when are you wrong? Well, okay, if we can recover this support and we start to rally back into this area, okay, then this was a bear trap, false breakdown. All right, that'll tell you when you're wrong. That's why it's important to take positions near levels, because when you're wrong, and you can be wrong small. All right. Again, the name of the game is be wrong small, and when you got a winner like a Peloton or something, you can make huge gains. Qualcomm, look at that. All right, we're bouncing off the 200-day right there. This thing was really oversold. I mean, look at the daily. How we just hit this 27, oversold on the RSI. So we were really oversold. So to see a bounce, that makes sense. We're bouncing, resistance right here at 129.40. Support is the 200-day basically at this point. So we could bounce, look for, if it breaks above this, then we're probably going to go up to this 142 area. I think that would be probably the end of the bounce in this. So that might be a objective area to re-add to a short, or we could get rejected right here. I want to show you guys something here on my trading platform, looking at triple Qs, all right? So here's your resistance right here that I showed on my other chart at 311.20. It's about 311.25. I've got it marked out here on the trading platform. And look, we're above that, all right? So you can see that we're above it, but it's not, one thing, it's not impulsive. This break above this resistance level, it's just kind of grinding above it. See how we're just like making these small little candles, we reject, recover, and look, just really sideways. Now we're looking at a 1 minute chart, so this could just keep going a little bit higher. But the point is that the nature of the move is important to watch. It's just not it's not an impulsive break out of resistance. Usually when you break a resistance level, you should see the buyers flooding in, and you should see impulsive buying, and that's not what this looks like. Doesn't mean that we can't go a little higher. I think the highest that this move is likely to go, if we're going to go higher, is about 314. And, we're about $2 off from that. But usually, this to me looks like this is where it's going to die out. It pops it above the level, kind of runs some stops a little bit, for kind of dances around in this area for a little bit. And then you'll see this thing roll over and fail probably today. Or close down near this 311 area and keep everyone kind of guessing, and then likely tomorrow we'll see a move down. All right, so that I just want to point that out. When you see a breakout above now, if this broke above and just boom, you saw these big green impulsive candles, all right, then that would tell me that we're likely going, much higher. But instead, it's just kind of drifting higher, showing that there's just not impulsive buying. There's just this like low volume drift on a breakout, and that's not, you don't want to see a low volume drift on a breakout. So just something to watch. Okay, Zillow Group. So again, support 132.57. They broke it below yesterday, but popped it back above today. So likely we're going to go up to this 156.77 area. And that's really it. Resistance up there at 157, roughly. It's right around this 157. You can mark it out on the hourly if you want to look. It's I've got the gap right there. They stepped in a little early. It's probably right around here. It's about 158.50. All right, somewhere right in there. You don't have to be exact when you're close. You just want to be as close as you possibly can get. So that's resistance, and support is about 133.25. A break below that, and we're heading lower. Again, we could just kind of dance around for a little bit. One thing you could see is, if you bounce up to this resistance level, something to mark out, you've got a shoulder, a head, and, you could make another shoulder right there, and head and shoulders topping pattern. I think that's probable, we bounce up to there, get rejected, run down, break the neckline, and down we go. Something to watch for. NEO. All right, so NEO's obviously, catching a bid today. NEO's probably heading up to this level, 48.34. I'm still short NEO. I'll just ride this bounce out, and I think it's likely heading down to this 22 area. Why do I like it? Well, look, this is daily support right here. Okay, let's look at apps here. Apps, again, I'm still short apps. I don't see any reason to not be short this thing. So obviously bouncing today, it's up 16 and, about 16.5%. But again, yesterday it was down 16%, roughly. And when something falls 16%, it takes more than 16% to recover. All right. It's not a give and take. And that's just how the math works out. If you drop, I always try to talk about the math and I get people clowning on me. But, if something drops from $100 to $50, then it's lost 50% of its value, and to go back up to $100 from 50, it takes 100% gain. All right, because of 50 doubling would be 100% gain. Something that fell 50% takes 100% gain to get back up to break even. So that's basically what we've got here. Big drop, little bit of recovery, still lower. And where are we at? Well, we still broke this major trend line that this thing's had since March 2020. So again, I don't see any reason to not be short. We have negative divergence right there. I don't see any bullish divergence or anything. Again, this is just getting started from what I can tell. So you break, you bounce, maybe we could back test. We might, who knows? But the point is, back tests are objective areas to add to the short. Right now it's a sell the rip kind of thing. And then you look for a break of this 65 area. Once we break 65, I think it's going to be a pretty swift move down to about 42.50. That's our next major level of support. I like it. AMD still short this thing. Again, all these bounces, there's no technical change. All right, it seems bullish, feels bullish because you gap up and just run higher and everything's off to the races. It feels like, but all it's doing is just recovering some of the losses that these things have taken without taking out the technical picture. So AMD. 2016 lows on the daily chart. Nice clean uptrend right there. Recently, as I zoom in, we broke. There's your sell signal. We're still below the 200-day as well. So here's the 200-day sitting at 78.45. We ran down to support. I pointed it out that this thing was at support. So I was like, yeah, it's likely going to bounce here. But there's support about 73.50 or so. And, you get the bounce, but technically nothing's changed. Again, this is not day trading, it's swing trading, so I'm not really looking to just catch a small little move. I'm looking for this to, continue lower. So I think we bounce, we're going to muddle around, maybe we do a back test, maybe we don't. But ultimately, once we fail, which I believe we will, this 73.80 area, then it should be a pretty swift move down to 58.77. That's your next level of major support. So again, once we get down there, I'll be looking to cover some of the stuff, and because we're likely going to get a bounce. But Yep, that's what I see on that one. What else did I? Oh, Tesla. All right, I did cover Tesla today. Tesla was, a pretty good trade for me. Again, I was shorting the thing up here. I stepped in a little early and was shorting it. It has dropped from the highs, which obviously I didn't short it at the very highs, but from the high to the low, it dropped about 40%. And we have this trend line right here that I marked out that yesterday we failed, but today they gapped it up and pretty impulsively are recovering that. So this one has a little bit of a technical change in the fact that it gapped right to support. See where it gapped up to, right to support, and then the buyer stepped in and bid it up. So I covered that at the open. Once I saw that starting to recover, covered that short. And as of right now, I don't know where this is going to go to. So maybe it bounces all the way up to here. Maybe it just gets rejected here. What I'll probably be waiting for the next opportunity to short this is another breakdown of this trend line. Until we get that, I'll let this thing just go and do its thing. It was a profitable trade. So, okay, look at the miners here. Gold, I've put out a video this last weekend. Go back and watch my gold miner video I put it out on Sunday. And it's a really in-depth video covering a bunch of different miners. So if you want to look at that, because again, I think the miners are a buy right now. In my opinion, they are a buy. I've been adding to these things. Look at GDX. I've been pointing this out. Here's your major level of support on GDX. It goes all the way back to 2013. It's sitting there at about 3150, we'll call it. So that is, we gapped, we held resistance through all these years. Resistance, moving in, pretty much held as resistance there, held as resistance there. Then it started to, still was resistance, and we broke above. Gapped above, and then it was support, 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 run higher, and then trickle all the way down over all these months. This is what discourages people that are, if you didn't get out of your position. I did get out of all my miners when we were rallying up in here. But now I'm looking to reload back up. And so anybody that's been holding, they get discouraged. Anybody that was buying on this big ramp, they end up getting out. It just gets all the weak hands out of the trade. Fell down to support, and I kept saying, look, it looks like the buyers are in this area. Today, gap up and, not impulsively running, but still we're gapping higher. So we'll see where we close the day. I still think this is the area. The buyers are in this area. They were buying it. We've gapped, decent today. All the miners are up pretty good. And I think that, there's been some good opportunities to buy miners. We can look at these miners real quick. I mean, they're kind of selling off a little bit, but you can see Barrick Gold up, let's see what else is kind of up. GDXJ is gapping up. I mean, they're all just this HMY. So again, here's my buy zone. I was buying it right down here at 379. So far, that's been the perfect entry. You can see I bought it here. I bought it back down here. And so far, that thing from that area is up. Well, at a high, it was up 22%. But as of right now, it's up about 19%. Looking good. This one, again, I'm looking for a break of this downward trend line for the next buy signal. You get an impulsive break above that, and that's likely your next buy signal, and off to the races we go. Looks good to me. And we'll wrap up with energy, XLE. I don't see anything yet, all right? I don't see a sell signal. I don't see any reason to short this thing. If you're long, I would just stay long. That's what I would do, just my opinion. But we're uptrending. On the daily, there's possible negative divergence just starting to show up. You can see it kind of right there. Let me just mark it out. That is a negative divergence right there, just starting to show up on the RSI. Let's look at the PPO. There is negative divergence. It's not confirmed because it's still pointed up. You want to see this turn down to help confirm that. So, again, starting to kind of show up, but it's nothing that's, glaring to me. It's not super clean. And we're above this trend. See this daily trend? We're just continuing to walk up this trend line. So, I don't see a sell signal on that. And that's all I got, guys. So, in general, the tech stocks feel very bullish in the short term because of today. They're all bouncing. But technically, there's nothing changing in the technical posture. Now, if something does change, I'll point that out, and that will change, you know, some of these trade ideas. But as of right now, we're just bouncing into a lot of resistance, or we're just getting kind of an oversold bounce, short covering rally. You know, these things have sold. They have been substantial down moves in a lot of these. So to get sharp kickback rallies should be expected. Let's just put it that way. But as long as the technical posture doesn't change, I still believe there's some more downside. And so I'm positioned that way in many of them. All right, guys, thank you, and I'll catch you on the next one.